Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Returning guest to the program, Frank Holmes. He's the Chief Investment Officer and CEO of US Global, as well as the Chairman of Hive Blockchain. Frank, thanks so much for coming back on the program, and Happy New Year to you.
Well, Happy New Year to you and to all your listeners. Wishing you nothing but health and prosperity for 2018.
You had a fantastic 2017, and I want to use this conversation to talk about two areas, one of them being blockchain and the other gold, and also touch on how they're intertwined and how they're not related at all. I think blockchain's the hot topic right now, so somewhere we should start. And congratulations on taking Hive as the chairman, as the first public deal, the first public mining deal. It's been a sensation last year and probably will continue into this year. Just a quick update. What's going on with Hive, Frank?
Well, it's an exciting story because I couldn't launch a product. And I found out yesterday, Colin, that the four companies that applied for a Bitcoin ETF and Ethereum all pulled their product applications. And I found that this time last year, it was impossible to get any traction because they were concerned about anti-money laundering laws. And that superseded all decisions, but they kept trying to do it. But I changed and switched horses when I found out the CEO of Fidelity is speaking in New York at Consensus last May, and she doesn't speak at conferences. And they have $2.5 trillion in assets, second biggest discount broker in the world, and she has all their employees on Bitcoin wallets. She has a rig in her office, and I said something big is happening here. As I was working on, doing more work on this category, this industry. And so then the opportunity came along, and I said, yeah, I'll invest in it. They had no institutional investment. And rather than launching a product, I said, you know what, I'll put $5 million into it. I'll go in as a chairman, and it became a unicorn within 4 weeks. And I think the big reason why is because of Genesis Mining. It's the largest cryptocurrency mining company in the world where you can outsource to the cloud and mine these virgin coins. And they're in Iceland, they're all over the world. Three guys. It's a remarkable story. The CEO is 28 years old. Marco Krohn, is a 41-year-old PhD in theoretical physics. The CEO is Marco Streng, Streng. It's a great TEDx talk on him. And they own 30%. And I think that's really what attracted to me, that we had their intellectual capital and their power. And it's been a big success because it's also lifted all the companies in Canada outside of marijuana stocks. You've seen this big move going into blockchain technology. Navalcraz is raising a lot of money here. Other people are raising money. So I love the excitement of that formation of capital for new businesses.
I think you probably saw this first, or at least were the first to act on it, the fact that so much money was being made and rushing into the cryptocurrencies. And then that money started spilling into this ICO space. But the fact of the matter is, looking at the Coinbase user base, there's only somewhere between 13 and 15 million Americans that are actually trading cryptos through that major platform, yet there's, 100 million people with an E-Trade or a Scottrade account that had no access to play this, and that must have been much of your thinking behind putting Hive together.
It was, and the other part was I was launching my Go Gold ETF Smart Beta, which outperforms that GDXJ 94% of the time in rolling 12-month periods going back data mining more than a decade, and has done exactly what it's going to do. In the first 6 months, it outperformed it by 6%. When launching it, the New York Stock Exchange told me that they invested in Coinbase 2 years ago. And so did I found out in this journey that USAA, the largest military insurance company, they also invested in it. And Coinbase had a valuation of $75 million in 2015. Now it's $1.7 billion. And the reason for that is that in less than 3 years, they've grown to 13 million customers. And you think of that and compare it to Schwab, 30 years to 10 million customers. Now, the average investor is not a big dollar compared to Schwab. But the fact is that there are so many people migrating, and it takes 5 minutes to open an account. I had a board meeting. I had all the board members. They opened an account in 5 minutes, and were able to send in $2,000. You can't open a Schwab account in 5 minutes. So that millennial world has been a big shift. And having Fidelity, the CEO, doesn't speak at an investment conference, speak at a blockchain event, told me something big is happening. And there are other sort of events that led to this journey of going into it. But I'm so happy because our returns have been phenomenal. We started mining coins at $300 Ethereum, and Ethereum went up fourfold. The cost of that mining went up 60%. So we made much more in this first quarter of launching it than we expected. We've been able to do subsequent financings with accredited investors. The model in Canada is only $25,000 minimum. In the U.S., it's substantially higher. So we've had accredited investors and institutions put a lot of money into. We've raised $175 million, and this time next year, based on Bitcoin price today, Ethereum price today, cost of mining today, we'll do over $300 million in revenue and have cash flow of $150 million. So that is wonderful and exciting for me to be part of that. And so I think it's going to lead to many other companies going to the space. Now, you have a junior mining company, and it has an operation in northern Quebec, and that mine is now depleted. They have a cheap hydro. I think that's what's you're going to see the next generation of trying to utilize cheap electricity anywhere in the world as the world, goes to this electrification. And I think the best commodity in that space, you think long-term, is copper. You're going to have copper to wire the whole world for your Tesla car recharges. And, I can go on with a list of things, but this wiring is so significant, and copper is the best conductor.
Well, Frank, I'd actually like to talk to you about copper a bit, but before we get into that, cryptocurrencies and gold share a lot of the same benefits. Certainly, for somebody looking at the fallacies of fiat currency, they both act as alternatives. Now, gold bugs have watched cryptos take off, and most gold bugs probably weren't in the space, which might have created a bit of a sore loser sort of mentality, or at least watching something else go up while you're not making the money hurts. And there's been a bit of a thesis going around that blockchain has been taking money out of the gold trade, which I think is a bit of a misconception. I want to get your opinion on what you think is going on between the two.
I totally agree with you. In this research I was doing to launch and invest in this space, what I found was that the early adopters are actually gold bugs. In Germany, it was gold bugs that showed up to buy, and they wanted to diversify 1 to 5% of their assets into Bitcoin when it was $10. And they've been doing it, on a steady basis. They've not dumped their gold. And when you have a hurricane like hit San Juan, and you have no electricity, well, Bitcoin's useless. U.S. dollars is critical. Silver and gold, you can get things, you get products, and it has economic power to it. So I think it's really a misstatement. But what I think is really interesting, Colin, is that you have all these socialist millennials, and that's not you, and or my sons, but it's fascinating that a lot of them were early adopters into it, but they don't want to pay taxes. So it's really hard to be a socialist and not want to pay taxes. Someone else has to pay them. And so I think that you have this sort of fascination that's taking place with so many millennials that own 4 currencies. Many of them bought Bitcoin, and then they traded to buy new ICOs. And last year, something like $4 billion went into these new ICOs. And I think that that's what's really hurt the junior technology, resource, healthcare, whatever it is, even this micro cap has seen the speculators that would normally go in, and millennials included, would go and trade these things, have got turned around and bought ICOs. It's frictionless. It's exciting for them. And I think that that's been the biggest competition.
Well, Frank, the fact of the matter is that relative to blockchain and to Bitcoin, gold has performed lackluster. But just putting blockchain and Bitcoin aside, where do you see gold this year? How did it do last year? What do you think is going to go for these gold stocks moving forward?
Well, you see, I think gold did spectacularly well last year, double-digit numbers. And since the beginning of 2000, it's up twice what the S&P is. So short-term and long-term, it's been an incredible asset play. What we've really seen has been so disruptive is the amount of money going into ETFs, in particular, passive ETFs like the GDXJ, and all of a sudden they garner 95% of all fund flows last year, and that triggers a bunch of concentrations, and they own more than 20 companies, more than 20%. They have to dump them. So they brought in $5 billion and in over a year, and they blew out $3 billion in a month. that really hurt the junior space. It still hasn't recovered. I give the metaphors like getting punched by Mike Tyson and then having both ears bitten. And so I think that we're going to repair ourselves with this resource sector and some of these quality companies, that have huge optionality. So if you're a junior company, you have to have huge optionality. You have to have low G&A to resources in the ground. And we have done our quant math like we did for Go Gold, Go AU in New York. We did it for the microcap stocks. And we found that those companies that always have a minimum $300,000 cash in the bank, have the lowest SG&A to assets in the ground, have had the best moves. And so it's recognizing that the universe from data mining is saying that if you're a poor explorer, poor developer, you will quickly be orphaned in this type of market. But if you're good and you have great optionality, you will get discovered with data mining, and all of a sudden you'll start getting more traction to your stock story.
Frank, you recently put out a piece talking about inflation. Inflation obviously plays big time into gold and gold price moves. As far as the government's been putting out the last couple of years, the inflation rate's been quite low. 2 points that you brought up. One is the real inflation rate shown by shadow stats, but also new policies, new groups coming in to manage the Fed and how that might play.
Well, there's been comments that they believe that inflation is not being accurately reflected. And I think we're going to get a big pickup in inflation. Like today, the announcement with Walmart going to raise the minimum to $11. Well, why is that? Corporate tax has fallen. So they're able to all of a sudden not have to pay as much in corporate taxes. They can then share with their employees, and they can increase the minimum, increase the benefits. Well, that in itself is going to create its own inflation. If you look at shadow stats, and I recently wrote a piece on this, it's really significant that inflation is running at 8%. But if the Fed's 10-year money is less than 3%, you're losing money. And when we know that, the gold investor knows that. I know from running a business that my inflation is much greater than 3% a year. And so I think we're going to see that transition. And I think the whole thing with Trump is a disruptor. Like Jeff Bezos is a disruptor. If you're a consumer of Amazon products, you love it. But what happens if all of a sudden he comes in and destroys your business model, like Whole Foods, buying Whole Foods, and all of a sudden he's distributing food cheaper? And the other side of that equation, people don't like it. So I think that the Trumps of the world are being very much disruptive. How it will settle, the markets are saying, the wisdom of crowds are saying that markets are enjoying it and liking it. It's a wonderful book that I highly recommend every investor read. It's interesting reading. It's called The Wisdom of Crowds by Sirwecki, and it basically explains how markets can be really wise but outside of groupthink. And what I think is in this sort of journey and the story of this is that the data miners, the quant funds, an article this week in the Financial Times have gone through $1 trillion in assets. And my friends in that space tell me that they're basically like Google on steroids, and they look at sentiment. And what used to take 2 weeks of negative news takes now 2 hours, and the stock is down. How the quants jump all over that. And they're reading the words of government filings, from SEC filings or the EPA filings, whatever it is. They're reading that data and making a quick economic decision, like reading Fed minutes, 250 pages of the white paper in 1 minute, and then immediately buying or selling into the futures market. I think that if you follow the general media, then you're going to get lost. There are so many Democrats that because of Trump, they missed this great cycle. As many when Obama became president and injected $700 billion in the economy and changed the mark-to-market rule, FASB 157, the market took off. So many Republicans, they missed that great move. And I know some of them. And so I think they get too busy getting caught up in their politics and the media, and they've got to listen to your radio show and get a better insight to what's going on, or they have to have quant funds doing the data collection to sift through the noise. And I tell my own investment team, it's best to be a libertarian mindset so that you don't get pulled in because the media has such biases and it distorts where capital is flowing, etc. And so with that, I think that the markets are looking very positive with lower taxes. corporately, and I think it's going to show up in inflation, and I think you're going to see gold rise with that, and even interest rates are rising. They are not rising fast enough to deal with the real CPI number.
Looking back to the beginning of 2016, we had that awesome rally in the gold stocks. It went for about 8 months, and we could call that the first leg in this cycle of the bull market. It's been about 17 months since that ended, and we've been in a sideways pattern. A lot of people are getting the feeling that these gold stocks may be ready to take off on the second leg, and I want to get your opinion if you're having that feeling as well.
If you're not long, you'll be wrong. That's my statement with that. There's no doubt you have to be long. We've seen so many restrictions. The supply side of any commodity as basically being restricted in some form or fashion, from environmental rules, which go on and on. I think that in the cycle from a discovery that used to take 7 years is now 20 years to bring into production. But the world continues to have babies. And the world is, Trump has done a masterful job in getting the dollar down, even though rates have been rising. And that's helped exports. And the Chinese, renminbi, tracks the U.S. dollar in the direction. So the renminbi itself is all of a sudden benefiting from a lower dollar. And that's igniting global growth. And I write about this every month to follow PMI. The Purchasing Manufacturers Index resets every month, and it's a good indicator of where growth is going 6 months out. So you get to recalibrate every month. And it's hit all-time highs here when you look at Eastern Europe and Europe, and the global growth is 57. Even Greece last year was up 50%, and their PMI went from minus 30, it was like 35, and the magic number is 50, to 52. And that move moved their stock market and moved their growth. So I remain very bullish of global growth, and I think this is very important for gold. We're seeing oil now touching the threshold of $70. That's inflationary. And when we get the petrodollars recycling in the Middle East, they always buy gold. But they do it for the love trade. And I think the fear trade is just going to maintain the price of gold trades higher. And quality gold stocks, and I mentioned earlier copper stocks, and the best always are copper gold porphyry deposits. You can get 2 for 1. I think that they're going to get a reset button and trade up.
Excellent. Well, I'm hopping around a bit here, but I don't want to miss anything, and I have some notes. So I'm going to end with another question on blockchain. I got some notes here about Metcalfe's law in regards to blockchain. So there's been a lot of questions from people. How big can this go? Is this a bubble? What does Bitcoin at $15,000 or $13,000 mean? Tell us what you found when looking at this through the lens of Metcalfe's law.
Well, anytime we get a supply restriction in a commodity, the price surges. A strike in copper in Chile, and copper goes up. A mine cave in from Grasberg, rock slide, all of a sudden it impacts the commodity cycle for copper because they're such mega producers. So what you're seeing when you think of that supply restriction, demand growing, the supply side is restricted because Bitcoin is capped at 21 million coins. It's estimated that 5 have been lost. And so now you're left with, right now, the float's about 10 million. So the demand is growing so rapidly. And earlier in this interview, I talked about Coinbase getting 50,000 accounts a day and Coinbase going to 13 million customers. Even if they're only buying $2,000 at a pop, they're buying Bitcoin, and the supply is very little each day, and the demand is rising each day. So it has to trade up. Well, what Metcalfe says is that anytime you have a network where there's more users using the network, the value grows exponentially. And he observed this law, like Moore's law, back in the 70s, with telecommunications, cable operators starting to explode, and everyone started getting cable, and the model was applied to mobile phones. As cellular phones took off, how could you get bank financing? A lot of it was based on the value rises based on Metcalfe's law, which means Bitcoin's going to grow exponentially, but it'll have big volatility. And what's interesting to me is that you can buy, $2,000 of Bitcoin, and you can put it into a wallet, and they give you fractals. They may charge you $2 like an ATM machine, but you can get fractals. You can buy food with it. You can buy Subway. You can go to Starbucks. You get a lot of them. You can buy Tesla, you can buy Microsoft, you can buy Dell computers. I could go on with the list. So I think that there's more and more people using in the fintech world of adopters to it. So I think that one has to look at the value of Bitcoin based on net caps in the law, not talking heads, especially Jimmy Dimon now has come back and basically said it was a mistake, saying it was a fraud. Regretted saying that. Buffett says everyone's going to say it's going to end badly. But if you have enough of these users and they're all unleveraged, it'll be volatile, but it's nothing like being leveraged with the crashes of 2008, the tech bubble. I can go back with every major correction in the stock market, and real estate is always to deal with leverage, excessive leverage. Most of the buying that's gone into the Bitcoin space has been non-leverage. It's been cash and it's been small numbers. I did see that FINRA has gone after some people that are trying to offer leverage for people to buy these currencies, and I think that's great. I think this is very speculative, but speculation, it was when you look at what Bitcoin's done, it's woken up the power of blockchain technology, just like email woke up the internet. It wasn't until AOL came along, and then Hotmail, and then it was bought by, I believe, Microsoft, and we can go one company after another offering free email. That really started developing the use of the internet. And now there's almost 3,000 patents filed by financial institutions on blockchain technology. I wouldn't sell my gold stocks or go and trade this space. I think I would just diversify and trying to understand this build out. Who's going to win? We don't know, because Facebook and Snapchat wasn't around 10 years ago.
Absolutely. Well, very good insights there, Frank. I'm sure it's going to help our listeners tremendously when looking at gold and blockchain and how they act together. Frank, we've had you on here for 20 minutes. I know you're very busy and you've got other places to be, but thank you so much for joining us, and we'll have to get you back here in a couple months. Also, I just want to mention that I'm a subscriber to Frank Talk, which can be found at, I believe, usglobal.com. Is that correct? Or usfunds.com, I'm sorry.
US Funds, usfunds.com.
Excellent. Well, great. Thanks so much for coming on, Frank.
All right. Well, wishing everyone, as I said at the beginning, lots of health and prosperity in 2018.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?